Welcome everyone. Welcome to the show. It is Tuesday. We have a lot to cover today, and we have an amazing guest who will be joining us in about 40 minutes from now. Let's give it a few moments here let me put you on the big screen here. You should be good to go. And team, everything is good on my end. So let's push this out to the different groups. Let's have a look here. The first few minutes are always a bit slow. So if you can, let's have a look. All right, if you can give me, team, if you can give me the link here, we'll push to all the groups, please. A lot to talk about. So we had, what was it? We had a week ago already. We had William Quigley from co-founder of Tether on the show. And you know what's funny is talked about this with the team. We have we have now almost like a waiting list. Only I'd say about less than a month and a half out. We have, give me just a sec here. All right. I need the tweet link, not the broadcast link, please. So I'd say less than 2 months out from the beginning of the first CoinRock show, right? So we've been doing these shows for less than 2 months now. What's interesting is just people are seeing what we're doing, they're seeing consistency. We talked about this the other day with some of this was on Sunday evening. We had a closed private Zoom with CoinRock whales. So, a small group of small to medium sized group of a very exclusive group of whales who are in several CoinRock projects who've been with us since day one. And I was saying this, it's interesting to see. It's always the same thing, right? So I've been building businesses full-time since 2007, started selling online and making money online over 20 years ago now. So, and consistency always wins. And so we've been consistent in a world, in an industry, crypto, right, which is known to be extremely inconsistent. And so just being consistent for 2 months already gets you, it already positions you as doing something different. So, very excited to have more guests on. We have, this week we're fully booked, and we already have several shows booked in May already with guests. So the problem that we're going to be running into very soon is we don't have enough slots for the guests. So it's a good problem to have. But like I always say, it's it's something where, let me just send this here. Let me send this to the group. What is this? All right, I'm going to be pushing this myself, it seems. All right, just a sec, guys. Okay, should be good. All right, good. So, and then let's drop the link here too. All right. So we have Marc Connors, who will be joining us on the show live in about 35 minutes. And that's going to be very interesting because it's going to be about macro. So he's been in traditional finance for 35 years. He knows, this is all he does, macro analysis. And, we, from day one, like launching CoinRock Media, the plan was always to get the most interesting guest possible, not to be confused with the most famous guest possible. There are a lot of famous people who have no idea about anything. They're just famous. They can't talk about the macro. They can't talk about, they haven't built a business. They don't invest, or they just have horrible ideas about what investing is. And so from day one, I told the team, I want to have people on the show that I actually enjoy talking to. And, people who are interesting, who are doing things, not just let me just a sec here, not just people who are used to being on stage and talking, but who actually do things, because my view is you only have credibility if you actually do things yourself, right? And so I can talk for days about building businesses. Done it full time since 2007. I have businesses running as we speak now, completely automated online. I can talk about building crypto. We build in crypto full time over the last 15 months. So I want people on the show that actually do things and are doing things. And let's just push this out now. Okay. So my point here is Marc has a very, very serious background in traditional finance. And yes, CoinRock is, I'd say, the reason why we started CoinRock in the first place was to build in Web3, right? To build in crypto. And so CoinRock is a venture builder fund. So of course, I'd say from day one, the goal was to build in crypto, but also with the show, I want CoinRock Media, and I said this from day one, I want CoinRock Media to bridge basically the gap between traditional finance, business, like non-Web3 business builders, non-Web3 investors, so TradFi investors, Web2 builders, and have them on the show too, because several reasons. Number one, I think if we only, and when I say we, it's you. If you're watching this, if you only stay in the crypto bubble, it's very easy to be stuck in an echo chamber. And so hearing the same people, the same voices, the same, if you follow Twitter accounts, the same Twitter accounts, or the same TikTok accounts, the problem with them is that most human beings don't venture out of what they do. And that's why they often don't have original ideas. They often don't have any perspective on different industries. And so I have, from a very young age, always been interested in other industries outside of what I was building in. I'll give you an example. When I started building before Web 2 and Web 1, right? Before social media, I was always interested in other industries. I was interested in the history of car making. I've watched dozens of documentaries about Henry Ford, how he built Ford. I was also, I took a very strong interest in the oil industry, in the, the manufacturing industry. Not industries that, I'm not in the oil industry, but I strongly believe that there's lessons to be learned from multiple industries, from every industry you can look into, and taking those ideas and applying them to the industry you're active in. And it's really helped me a lot throughout my business career. And so I think that staying only in crypto and only listening to crypto native, crypto focused people is not enough if you want to have an understanding of how the world works. And yes, understanding Bitcoin is good because it does open the door to understanding how money works and how central banks work and how debt works and how politics affect the financial system, how money affects politics, and vice versa. So, I think that there's incredible value in being connected outside of the industry that you're in. So if you are a crypto investor, you should be learning and reading about non-crypto, you should be, of course, learning about things that you're investing in. But you should also be learning and reading and spending time doing things and interacting in industries that you don't invest in currently, because it will give you different points of view, and that's the whole thing, right? Different points of view. So let me send this over to this group here too. All right. So that's my my non-market news, non-market alpha. But I think that if you take time, especially now that the market is awful. I mean, let's look at the bubbles here, right? The bubbles were at 85K, dropped down to 75, 76K. Was it last week? You know, it's funny. I actually don't look at price action as much as you would imagine. I basically look at price. I only see price action when I do these shows. Like, of course, I see what people tweet, right? So, when Bitcoin drops to 70-ish K, I saw that. But I'm not interested in the short term, whether it's Bitcoin, whether it's ETH, whether it's the projects that we have at CoinRock, whether, I'm actually not interested in the short term. I always have a mid to long term view. Of course, you have to be able to operate in the short term, but also be, or should I say, you should be interested in the long term, but also be able to operate in the short term, of course. That being said, I don't care about the price of Bitcoin today. I don't care about the 15-minute, the hourly, the daily. It's, of course, I'll see news from the CoinRock Media account, or I'll see these bubbles, but I don't seek out price action. Like, for weeks, one of our projects called Cyclics, for weeks, I did not look at the price. Last summer was, and many of the, so a lot from the CoinRock ecosystem, a lot of, OGs, CoinRock OGs know this. I am not interested in short-term price action. That's not why I wake up in the morning. We have a very clear idea of what we want to do, how we do it, and we are focused on the mid to long term. To give you another idea, another thinking point, another perspective, when we decided to launch CoinRock Media, I said this from day one. I said this is a 5 to 10 year play. So the view that we have on, like, the time horizon that we have is very different to crypto. And I think that's why a lot of people initially are a bit almost taken aback by the way we do things, is because I don't care about price action today. I don't care about price action of, like, Bitcoin being at 85K. I'm interested in Bitcoin in the next 6, 12, 18, 24 months. That's what I'm here for. And so if you stretch your time horizon, first of all, it gives you a lot more peace of mind. Second of all, you have no impact on crypto prices overall, right? You have no impact on Bitcoin. You have no impact on ETH. So why worry? I mean, if you believe in the industry, you should not need to be looking at the charts all day, every day. And so looking at these bubbles, we said this back in January, February, right? If you've been here for months now, I can't believe I'm saying months. It's like we're already mid-April, which is crazy. But if you've been here for months on these shows, it'll be fun one day to say if you've been here on these shows for years. But if you've been here for months, you know that we've talked about this choppy range for months. I tweeted about this months ago. After the Trump inauguration, after the Trump meme coin, I said there's no major catalyst right now for Bitcoin to have its next leg up. So if you take a step back and you actually look at the daily or the weekly, we're ranging. We've been ranging for months. The occasional dip on the 70K, under 80K, so in the 70,000-ish range. the occasional spike up to the high 80s, 90s. That's it. That's all we've been seeing for months now. And it's very painful for those who look at price action every day, because you get chopped. And we see this in different groups. I have my main accounts. I have, of course, anonymous accounts. So I might be in the group and I might hear you talking with one of my alts, which I think everyone should have an alt. For us especially, because there's groups that I can't be joining because my Telegram name literally says Matthias CoinRock. But funny enough, we hear the chatter about price action and about choppiness and people, shorting, and then Trump tweeting something bullish about tariffs and getting liquidated, right? So, and vice versa. So it's been a very, very difficult market to trade. And if you take a step back, and that's why the conversation today with Marc, we'll have him on in about half an hour, about less than half an hour, is very interesting because he is a macro guy. And so I want, like I said, to bring you different perspectives on the show. And again, I don't know. I had a look at the headlines of his Substack to have an idea of some of the questions and some of the how to where to direct the conversation. But I'm very honest with you guys. I tell you, when we start these live streams, I have no idea where the conversation will be going. Last week we had William Quigley. Shout out to William. It was a great show. We have, if you go to CoinRock Media, you'll see here. Everyone should watch this episode we did with William, right? Co-founder of Tether, OG in the crypto space, and we talked for the first 5-10 minutes about video games. I had no idea we were going to talk about video games, and he started being involved in digital collectibles in the 90s. In video games, and I grew up playing video games, in the old video games, even before many of you guys were even born. I used to assemble PCs, so the big towers. Like if you go to YouTube and you type in PC Tower 1995, I was assembling I had my small screwdrivers, and I had I would go on the weekend with my dad to buy, I don't know, a new graphic card, and I would basically try to build. And sometimes I need some help from real PC building experts, because I would fuck something up. But in the 90s, that's, if you grew up in the 90s, that's what you did. And so we talked for at least, during the whole show last week, at least a good 10-15 minutes about video games. So again, when you do these shows, you don't know where the conversation will be going. But I'm very excited to talk to Marc here in about 20 minutes about the macro, especially because he is from traditional finance, but also he understands Bitcoin, which is not something that many macro people like to talk about. A lot of macro people are more on the TradFi side, and they just don't have any respect for Bitcoin. They don't have any respect for this new world of digital assets. So that's going to be very cool. Let's have a look at some of the headlines here. So choppy, we are in a choppy range. Yes, it's gonna stay choppy for a while until we have a next. Again, we need something, we need a bullish catalyst. When, God knows, right? Off camera, I spoke to, I have over the last 15 months, actually even before that, but a very strong crypto network now. Some of the the OGs of the space openly admit, to this cycle is very confusing for them. They've been through all the cycles since 2009, 2010, and it's not easy. This cycle is very difficult because everything is dependent on really Trump and the policies and the tariffs. So it's going to be something that I definitely want to have Marc's perspective on what he thinks about the general macro. Maybe you guys will be disappointed to hear things. Maybe he's a bit more bearish. Maybe he's more bullish. That's what's interesting, is I want to bring you guys different perspectives. So with that being said, let's have a look at some of the news here. Remember, I said from over the last several months, I said that despite, oh, this is like a brand new article here. I just loaded these before starting the show. So this came out about 20-30 minutes ago. So despite the choppy range, despite the difficult markets, there's been some incredibly bullish developments for the crypto industry. Remember, the crypto industry is tiny, relative, right? When you compare it to the real estate market, the bond market, even gold. And so think of it as a small boat, as almost like a raft in the ocean. And if you look at the bond market, it's like a giant cruise ship. And so it's not as fast, but it's not as affected and as volatile, of course, as crypto. And anything that happens in the macro will affect, of course, crypto much more than it affects even the stock market. Despite that, we're seeing very bullish developments for the industry as a whole. So South Korea blocks 14 crypto exchange apps in regulatory crackdown. I think, personally, I see this as being bullish. Why? Because governments now are coming up, and many of them have already come out with clear frameworks. We have something here from the US, an article we'll see in a bit here about the next step of bringing crypto clarity, so regulation. And so with that comes also getting rid of non-registered apps, exchanges, and even software programs that don't have any licenses in different countries. Like in this case, South Korea has stepped up its crackdown on unregistered crypto platforms, ordering the removal of 14 exchange applications from the App Store. Again, which is interesting here, KuCoin and Mexi, if platforms don't have the necessary and the required local licenses, they will get in trouble. So, can they get back on? Of course. I say of course, but probably there's no guarantees, but most likely yes. What it does show is that governments in general, as a whole, are taking regulation much more seriously than a few years ago. This is not new. If you've been in crypto for a few years, you know this. This is coming. And so with that said, I want to have a look at the US. US aims. This is the article I was just referencing here. US aims for comprehensive crypto legislation by August this year. The US is making rapid strides toward enacting a nationwide digital asset framework, with lawmakers aiming to finalize crypto legislation by August. So 4 months away, 3-4 months away. This is something we've been talking about for years, of course, but more so, I'd say, since like Q4 last year. Right? This is a known thing in the industry. It's something that when I meet people IRL in the industry, from the industry, everyone is waiting for this. Why? Because even though the US only enforces, actually no, that's not true. The US can, the US being the US, it can enforce anything globally, but the US will have a different framework than many other countries. It doesn't mean that other countries will copy what the US does, because if you go to Europe, for example, Switzerland already has a very clear framework for digital assets. If you go to Singapore has a very clear framework for digital assets. Dubai, the UAE, has a clear framework. So some countries have a lot of clarity and give give founders and projects and investors clarity. The U.S., of course, as you guys know, has always been an issue, right, with the previous SEC administration. So everyone's waiting, all even including other countries, right? So we talk to people who are involved with other countries and advise other countries. This is something that other countries are waiting to see what the U.S. is doing with this, and many will model what the U.S. puts in this bill. So it'll be very interesting for us. Will it change the industry? Probably not. I mean, a lot of things, a lot of the most of the stuff here, I'd say 80% we know. When I say we, it's people in the industry. We know it's coming. So it's going to be the same for everyone. There's always, of course, especially in a Trump administration now, and Trump has, of course, a lot of influence in the industry. I'd say there's 20% of, let's see what happens. We have no idea. So he can directly require or request things to be added or removed, or he can strongly suggest. And it's going to be very interesting to see this. So the Genius Act proposes robust collateralization for issuers of dollar-pegged tokens. So one of the things stable coins, we know that stable coins are going to be a big part of, so they're going to have they're going to be bringing a lot of clarity to stable coins, which also is a direct result of the instability of stable coins. If you look at Luna UST, the previous cycle, a stable coin should not crash to zero and within hours and days, right? I remember distinctly being on the computer and seeing this Luna and UST just crash. And so when people have billions of dollars in these stable coins, of course, there needs to be something to, if not guarantee survival, at least mitigate risk. So that's something that, and we talked about stable coins last week with William, because of course, being the co-founder of Tether, he's intimately aware of what's going on in the stablecoin space. That's something that is going to have a lot of. So everyone's looking at that, at how the U.S. is going to be framing the stablecoin framework. Of course, Trump being pro-crypto, it has reshaped, and it has a major influence on this bill. I mean, make no mistake, if Kamala Harris or any other Democrat had won, forget about price action, because there's this running joke, of course, on Twitter saying that, oh my God, did we elect the wrong president? Would Bitcoin be at 150 or 200,000 now if Trump wasn't president? Joke aside, I think that, of course, being in a space that is so new, like crypto, that's going through its own growing pains with regulation, frameworks, and deregulation. You can see, I don't know if we have something about the SEC here, but you can see the SEC, again here, new crypto task force signals new era for clarity, right? So it's coming. It's coming. It's here. We're a few months away. And so, again, you've seen over the last few weeks, I tried to show you, let's see if this one is, this is a delay of the ETH staking proposal. But you guys have seen on the show here how many lawsuits and how many cases the SEC has the new SEC now has just thrown out. And you better believe that if it was not under Trump, a lot of those cases, the Ripple case, the Richard Hart case, a lot of these very high profile cases would not be thrown out. So it's going to be, of course, Trump has incredible influence over crypto in the world. I mean, you can see a single tweet about tariffs affects everything. Stocks, of course, bonds too, which is insane, and crypto, of course. And let's say 4 months from now, it'll be very interesting. What we'll do, we'll probably do we will do a special crypto regulatory framework overview episode specifically about the bill. Hopefully it's not 500 pages long, but if not, we'll just chat GPT the summary of it. But I think that it's interesting if you're in this industry to be aware of what the US thinks of this. Again, maybe the project you're building, maybe the coins you're buying are not in the US, maybe the project you're founding doesn't depend on the US, but you definitely need to know what's happening in the space. So that's something that's also very interesting to me. Something that was actually funny is to see these projects. This one is, so moving on from the SEC, and we'll wrap this up in about 5-10 minutes and then take a quick 2-3 minute break. And then we will get, let me actually send this to the team. And then we will get Marc on the show. So this is interesting because, let me close this and go back here. So yesterday, if you guys saw kind of the drama online, this happened, right? So Mantra, ticker OM, crashed 90%. Why? Several theories, of course. People are quick to talk about, rug pulls and scams and this and that, and rightfully so. It's a horrible industry. If for those who've been in the space for, especially if you're on the insiders, the insider world of crypto. That's also why we wanted to build, right? That's also one of the main theses of CoinRock was to actually build the right way in crypto. And so again, no one really knows in the public, no one really knows what happened with Mantra. But do we have a chart here? Oh, there you go. But this is not a nice chart within minutes. Of course, whenever something happens like that, everyone, and again, rightfully so, is this the Luna of this cycle? And again, this was not a micro cap. This is a project, I believe, that was for sure in the billions, probably around about 5 billion, 6 billion. I believe it was in the 90%. It was around 5 billion. So of course it's scary, right? I mean, you go to bed, you think that you're holding a coin that's in the billions. I think it was a top 50 coin. And you're like, okay, theoretically, there's less volatility than many of the smaller caps. And then you wake up, you're like, oh my God, what is this? So of course, panic, people calling for a rug pull, people calling for the founder to go to jail. I mean, look, I don't have any, I haven't asked about this to any of my friends in the industry. I don't have any insight on this massive red candle. It's crypto. So I'll just preface, it's crypto. Weird things happen. Maybe it's the team, maybe it's not the team, maybe it's the market makers, maybe it's a centralized exchange. Again, there's a lot of, what I will say is, you're always very quick to point fingers in these cases by saying, oh, it's this exchange, or it's this, or it's a hack. The truth is, sometimes, and having actually been on the inside of some of these red candles, exactly just under a year ago, actually, so CoinRock was, through our partners, we were connected to another project that was exploited. So there was an exploit in the smart contract, or one of the contracts. I believe it was either the I think it was a vesting contract. And so our partner said, "Hey, can you jump on?" We were on Zoom, on Google Meet, and we helped in kind of quickly identifying what happened. And this is us being outside of the project, but inside with, I mean, I don't remember actually the exact market cap, but uh, the red candle was extremely violent, and that was because of an exploit. And these things happen in crypto. Simple as that. And it's very easy to point fingers and like, oh, this happened, that happened. I can tell you guys, until you have a post-mortem, which can take hours at best, sometimes days, to understand what's happening, you have no idea. So when I say you, it's the public reading on Twitter has no idea. Of course, it's very easy to, there's a lot of click farming and clickbaiting that happens, right? Because it's, these red candles get headlines very quickly. So don't believe what you see. It is social media. People farm clicks. So, again, I personally don't know exactly what happened. We definitely have a few ideas, but those are just, I'd say, well-educated guesses / opinions. But something happened clearly. And so, again, you have to be aware that this can happen in crypto. All right, let's do another 1 to 2 minutes. Let's go quickly here. Kraken launches commission-free stock and ETF trading in the US. We talked about Kraken. Very bullish to see these OG exchanges doing something that they could not do in the previous under the previous SEC regime because they were just getting sued all the time. Now they can actually focus on building and growing. So very bullish on this. Let's have a look. Trump's tariffs, of course, 800 million. So the crypto market experienced a major blow last week as investors pulled 800 million from digital asset investment vehicles. Fear. We talked about this. Nothing new. As long as the market is uncertain, we will keep seeing these rallies and then these crashes, right? So nothing new. Strategy is Saylor is buying Bitcoin like crazy. This was yesterday. Bought another $300 million worth of Bitcoin. He has 530,000 BTC. What's up, guys? Welcome to the show. We will be on with Marc in 6 minutes. So we'll take a quick break, quick 2-3 minute break, and then we'll have Marc on and the team, if you can confirm that everything's okay on your end. MetaPlanet, basically using the Saylor, the MicroStrategy playbook, and buying Bitcoin. Japanese company, publicly listed company, buying Bitcoin almost every week, every few weeks now. So very interesting to see them move more and more into crypto. We talked about this. We talked about the pivots. This was funny. Scottish boarding school to accept Bitcoin for tuition. So this is one of them. Like, you have to file this in. I had no idea this school existed until they bought Bitcoin. Free advertising. You can quantify the earned media that these companies and institutions and now schools, boarding schools, get just by buying Bitcoin, right? Covered in CoinRock Media, covered across the crypto space. Lamond School, a prestigious private day and boarding institution in Helensburgh, Scotland, is set to become the first school in the UK to accept Bitcoin for tuition payments. Great marketing move. I mean, they didn't buy Bitcoin in this case, it seems. It seems like they just said, hey, you can pay in Bitcoin. Amazing. Like, literally free advertising. I say this at least once a week on these shows. Any institution, any country, any company, especially in these kind of weird industries that are not tech driven, a boarding school, right? that now accepts crypto, Bitcoin in this case. I mean, pretty cool school though. Amazing castles, by the way. I lived in London for about 10 years. I mean, if you go to the UK, you have to get out of London. A lot of people think that the UK is only London. Big mistake. You have to go out of London too, and just do at least take a day and go to see a bunch of castles. We've done a good 10 castles in the UK. Amazing. And this is not even a castle. This is just like a boarding school. But again, free advertising just by accepting Bitcoin. So we're going to see a lot of this. This is adoption. And yes, the market sucks. Yes, there is a lot of fear, a lot of panic, a lot of FUD all over the place. But you haven't seen me change my tone. I'm very bullish mid to long term. I'm not interested. I mean, of course, I'm interested in the short term, but I don't care. I really don't care. So, with that being said, let's take a quick 2-3 minute break, and we'll be on in. Let me have a look here. We will be on in about 3 minutes, 3-4 minutes with Marc. It'll be a very cool conversation. So for now, let's just put this banner on, and we will be back in about 3 minutes, guys. Stay on, and it'll be a cool conversation about the macro and Bitcoin. Stay tuned. Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. All right, welcome back, everyone. Welcome back to the CoinRock Show. We have Marc, who is joining us in literally a few seconds here, so we'll add him to the stage. And let's have a look here. We should be good.
Yes.
Welcome to the show.
Thank you. Am I coming in okay?
Yep, very good. Let me put you on the big screen. All good.
All right. As I say, from across the pond into your studio.
Very
Great
cool
to be here.
Yeah, it's it's something that we're actually very fortunate to just be able to do. As you're in the US and 10 time zones away, and we're talking about your experience and the macro and everything. I'm very excited to get into this. So I have a few lines from your Substack, and I just want to. So the way we do these shows, it's very open-ended. It's just a cool conversation. Let me just read to give some context on the experience that Marc has for everyone here. 35 years, not months. Which it's funny to me is so many people have no idea about the macro and they have an opinion. That's why I wanted to get people like you who actually have an experience and an opinion. 35 years as a portfolio and risk manager, 3 decades in the markets informed my top-down global macro process to distinguish between a risk-off and a regime shift. Bonds give way while Bitcoin becomes part of the next regime. Discover more on my Substack. So that's the introduction. Of course, the floor is yours. Feel free to tell us what does Marc Connors do and what does he think of what's happening.
Great. Well, first of all, thanks for having me here on your show. It's always good to talk to someone who's in the space, and it helps me rethink my thesis and how to communicate it. As you said, that is an accurate representation. I've been in the business since '89 and did internships actually in '86 and '87 at Salomon Brothers on the floor where Michael Lewis was while he was getting the information for his first book, Liar's Poker. So I do go back. I grew up in New York as the rise of the bond kings were happening, but I did not come about to this spot, I would say, in a classic way. I'm not a classically trained economist. I'm more of a markets practitioner. I came up as a salesman in credit and convertibles, first on a bond desk at Dean Witter, and then at Smith Barney, which all these firms got subsumed into the behemoths that exist today. So these smaller firms gave way to, similar to tech, to the rising financial giants. But where I came to in Bitcoin to try to land the plane is I was a risk manager at hedge funds, and I was watching all of these very bright, capable, well-resourced managers not be able to beat the S&P. And what I found was all of their long short trades, being long one name, short another, trying to make money on both sides, that it ended up blowing up, because when an event happened like 1998 long-term capital, or say 10 years later, the crisis with the global financial crisis, the Federal Reserve came in and said, in 98, they said, hey, boys and girls in the banking industry, you figure it out with long-term capital. You lent them the money, make sure they don't go out of business, because this firm has so many treasuries they can't blow up, because then it blows back on us. You figure it out.
Yep.
That changed, Matt, 10 years later in 08. The government had to figure it out. So they had to bail out. And to me, that was still the most unheard bell that has rung and changed everything. Because now the liabilities are at the US government and they can't fail. So they'll continue to print money. And so I followed it from more the portfolio side, and the breadcrumbs led me to the Fed. And they're going to continue to light fires and put them out until we have a debt load that I don't know what the end game is, except to own Bitcoin.
Yep. I mean, there's so much we can get into.
What are your viewers? Tell me more about your audience, because what I say doesn't matter. I'd love to connect with them.
Yeah, no, this is great. So I'd say that the majority of people in crypto, and I talk about this like every week, we do several of these shows every week. Everyone in crypto likes to pretend that they know the financial system. And so many of them are just too young to even go back and understand what the 2008 crisis was. And so I think what you experience, what could be invaluable for the audience, is understanding today. Maybe again, there's 50 things we can talk about just with that intro. Let's talk maybe about, there's a lot of fear in crypto in general, Bitcoin, of course, because people look at the chart is down, fear goes up. Let's go. I was actually saving this question for about half an hour from now, but let's dive right in. You talked about printing, you talked about the Fed. This thing about QT, QE, simplified for people watching, what does it mean and where are we now? And will printing resume? Because people think, of course, printing means, Bitcoin goes up.
Yes.
Take it.
Yeah. So I'll start with some economics. When in 08, when I was at a hedge fund, things were happening fast, kind of like now. On the weekends, there were new stories. Remember Trump's truth about the crypto reserve, and he didn't include Bitcoin and Ethereum on that Sunday. And then 2 hours later, he said, of course, Bitcoin. So, and we're seeing that again, Friday with the reversal of tariffs. So when we are at a position now where policy is not being formed over time, it's being formulated over the matter of days, floated, and they're listening to see how the market responds. And if they like it, they'll continue. If not, they'll pull back. In 08, when that happened, and is it Matthias or is it Matt?
Yes. Yeah.
Matthias, great. Matthias, in 08, when I was at a hedge fund, things were happening so fast. I just took things in 3 buckets. Economics. Is the news coming out of the ECB going to impact GDP, employment, and inflation? Economic factors.
Yep.
And the other bucket was markets. Will that news coming out of the FDIC drive bond prices or equities? And then the third bucket is examining the players to make sure I'm not missing a source or a catalyst. Whether the FDIC is something that no one knows. They became the most important person in a way because they looked at the banks.
Yeah.
Everyone assumed the bank was like a button that worked, and obviously it didn't. So those are the 3 buckets. So let me start with just a quick one to your audience, folks. If you were alive between 1900 and 1984, if you woke up in the morning, there was a over 35% chance that you were in recession. Just happened a lot.
Wow, I didn't know that. Wow.
if you were born in 1985 to today, the chances of being recession were less than 7%.
Yeah.
We just don't have recessions, and that's a huge deal, because recessions are where bad companies go into bankruptcy. Bankruptcy is a wonderful tool that the founding fathers put in. I believe it's one of the second articles in that they put in the Constitution, I think, not the Bill of Rights. The reason they did it is because in England, the son would bear the sins of the father.
Yeah.
That came out where debtor's prison. Your dad died in prison. Hey, guess what? You're in next. And they saw that as such a legacy of despair that they changed it. So bankruptcy allows a rebirth. But when 08 happened and the government took on trillions of debt and have only increased that number, we can't have a recession because we don't know the reaction function on whether or not it would blow back to the government. So folks, when we say printing, instead of having a recession in a default cycle where, money gets reallocated, there's pain, but there's rebirth to new opportunities like 02, can't have that anymore. In order to stave off the recessions, the government will do things like buy their own treasuries, like they did, QE, easing. It's a new phenomenon, folks. These words didn't exist. The reason it happened because in 08, there was a stepwise function where the markets went public, rather. The government now controls overnight funding. We used to watch something called the TED spread, difference between banks and the Treasury. And when the TED spread, which was the US T-bill versus where the banks would fund, again, banks were not governed. If that went wider and the banks had to pay 10, 15%, that means they were risky. And people were like, oh my gosh, the TED spread blew out. That doesn't exist anymore because the government guarantees overnight rates.
Yep.
So people get lazy and stupid. They can do whatever they want in banks because they're guaranteed at a cost, Matthias. The cost is our debt load. That is a structural. So I call that the monetary ratchet. Going forward, we only have one crank. It's only going to go more.
What's your view? I think that, if you look at what Musk is doing with Doge, of course, a lot of headlines, both good and bad, depending on which side you see it from. So left politically or right. What's interesting is I think you said something very, very crucial that people don't really comprehend, like how deep it is. There is no going back on this debt, right? What's your let's dig into that more and explain it to people so they understand that this is too big.
So there's to talk about the context. In scuba diving, I don't scuba dive for some reason. This analogy sticks in my head. They say you have to descend at a certain rate or else you'll get the bends. It's an acclimation. Same thing if you're climbing a mountain.
Yep.
So what we did between 08, when our debt load increased, not just increased, but increased relative to our engine of GDP.
Yep.
We used to have like 30 to 65% debt to GDP. So think of it as your house. You buy a house, you can put no money down and have 100% loan to value. Yes, loan to value. And therefore, if the value goes down a little bit, you're in negative equity. And if you just sell your house, you actually lose money. So that's debt to GDP. So that was at a comfortable rate when Nixon was around 30%, Reagan 40%, and then it got a little higher. And when we went to the global financial crisis, it had already crept up to 80%, call it loan to value. We're now at 125. And the problem is we could afford it. Think of one of those teaser credit cards, folks. You make $100,000 a year, and you used to have only $60,000 of credit card debt. but now you have 125. Not good.
Yep.
But it was a teaser rate. It was only 1%. You could afford it. Our interest rates went from almost 0 to 500 basis points. So a quarter point to 5. It went up 20 times. We have an interest problem. Scott Bessent, our Treasury Secretary, knows it. He's trying to get interest rates lower, but we don't control the interest rates anymore unless we buy our own debt. So back to the credit card analogy, if I could, our rate of debt went up so high, faster than our ability to earn out of it. So we now have the bends. We're getting, we're experiencing pain from accelerating into a degree of debt that our revenue have not caught up to. Again, 125,000 of credit card debt, you're only making 100 grand. And 5 years ago, 10 years ago, you were only had $50,000 or $60,000 of credit card debt, or say 5 or 6 months ago, to put it in relative terms. So I don't know if that's a good analogy, but I think the credit card one is good. You have more debt, and you just left the teaser rate, and now Scott Bessent is running around trying to lower that teaser rate from 5 back to 0 or 3%.
What's his time frame? He's been in the news a lot, of course. What's your view on him and his objectives?
He stated objectives, which are, take him at his word. He's respected in the industry. I don't know him personally, but I know his legacy, his workflow. He's most famously early credited with highlighting the trade in '92 with George Soros to try to attack the pound, because the pound was, they were stuck between a rock and a hard place. There were these floating rate loans that the homeowners had that were rising, putting the country, at risk of recession and default at the homeowner level. Yet the country had to keep their rates high to attract capital. So what they did is they decided to try to sell the pound short, because they knew that eventually they had to let the pound fail and lower rates and have the pound go lower. So it was a trade. He brought it to George Soros. They made, $1 billion in a day. That's when $1 billion are worth a lot of money. And so that was '92. So the guy's been around a while.
I know I read a lot about the Soros trade. I did not know that Scott Bessent was involved in it.
He ran the London office. So he's credited with bringing it to the attention as a young man in his 20s.
Interesting. Okay. That makes sense then.
So he's a learned macro. He knows trade. He knows flows. He was a fan of the Japanese prime minister in 2014 who tried to grow his way out and eventually failed. So Scott Bessent said he wants to have 3, I think, million barrels of oil produced a day. Energy is important. Technology is where we live. It's the only reason the U.S. is still a world power. We have 50% of our stock value, if not more. Europe has less than 7% in tech. That's our driver. In order to drive tech, you need energy. So he wants to increase our barrels. That's where drill baby drill comes from. That's his first of 3. The second one is he wants a 3% deficit. I don't know how he does that. We're now at 7 and climbing. So that's really to me, the reason why I'm long Bitcoin and focus on it is because of the problem that we're talking about in macro. You just can't stuff that debt back down. Do we try to do it, and I'll talk about remedies. Second is 3% deficit. That's cutting more than half. Doge, I don't think, can do it. And then the third 3% is growth. Let's keep trying to grow our way out of it. Keep the deficit low so that we don't have a large interest expense, and let's grow our way out of it. I don't know. I think 125% debt, and we're using 25% of our annual income from taxes to pay interest expense. And interest expense is something that you no longer use. It was a purchase in the past. That is, if there's one thing to take away for your audience, the U.S. government taxes corporations and us. Today's tax day, so very appropriate timing.
Yep.
All the taxes that come in, 1 out of every $4 goes to pay interest for something that has no productivity for us going forward.
Yeah.
So that's a problem. And it's a problem that I think the only way out of it is to inflate your way. That's why he's trying to have inflation with low rates. And that is tough to do.
Yeah.
I know that's a concept that we don't think about normally, Matthias.
What's his time frame for accomplishing this? In his view, of course, it's a very tough feat. But what do you think is his view for all this?
Immediate.
How realistic is it?
Think of midterms, which is a first hurdle. You got to keep your House and Congress and Senate in majority to pass everything. They have that now. Going back to the credit card, imagine that your credit card isn't just something you can pay the minimum payment anymore, but you have to pay a third of it in the next few months.
Yeah.
So you have to not just carry it, but you have to pay the principal.
Yeah.
We have a third of our debt coming due in 12 months in the US. We have 34.5 or 6 trillion. We have 6.5 trillion of T-bills coming due. We have 2.5 trillion of notes and bonds. Those are the longer duration coming due. And then we have about 2 trillion of new debt, deficit funding, that we have to fund. And that's all coming off of low coupon debt. The T-bills less so. But those notes and bonds are coming off, 1% debt issued in 2014 and the like. So it's immediate. It's 12 months. Let's say that he has 12 months, 6 to 12 months to try to get rates lower. And I think less, because the tariff regime is an absolute game of chicken.
Yeah.
You're increasing costs here.
Yeah.
The government collects the revenue from either the consumer in the US or the producer.
Yep.
Higher prices. What are people going to do? You're going to slow your consumption to absorb the higher prices.
Yeah.
So it's not even threading a needle. I don't know the analogy, but it is a tough gambit.
Yeah.
And they're relying on lower regulatory hurdles to increase investment and then growth. It's Ronald Reagan's playbook on steroids, but the debt load is 3 times more.
And faster, and it needs to be done faster too.
Yes.
So last week, tariffs, of course, all over the news, and looking at the reaction of the 10-year. So first of all, before we get into this, for people watching, I know many of you guys are in crypto and you want your meme coins to go up. Please, I say this every week. You will never fail and never lose by learning about this stuff. It's boring. It can appear boring, but this is how money works in the world. So you have to get over that. Oh, this is what the boomers talk about. This is what you must understand if you want to understand money. And I think it's a good opportunity to get someone to get it from someone who knows this space. So coming back to last week, tariffs in the news, of course. For about a day, the 10-year is trending in the right direction. And 2 days later, it reverses back up and heading back to 4.5. Can you just talk about what happened from your view with that, say, 3-4 day window?
Sure. So on the technical side, and you said, is there anything I can talk about? There is a whole ecosystem of financiers that will take $1 of, or let's say they have $1 million to invest. Instead of buying $1 million of Tesla, or what they'll do is they'll find a bank and give them $1 million and say, I want to buy $50 million of treasuries.
Yep.
And treasuries you can buy on high leverage because it's deemed to be a safe asset and a low volatility asset. So a lot of people will have a trade where they're long treasuries at say 4.5, and they may short a related instrument called a future.
Yep.
It doesn't have a coupon and it trades. So they just put a trade on long, short, and they make little bits of pieces, but levered 50 times. That trade went the wrong way. And whether it's, the butterfly in the Amazon flapping its wings, whatever it was, but I think it was indigestion, and it was a vote of no by the bond market.
Interesting.
We issue debt, people hold it, and they may say, you know what, I don't like your plan. I'm selling some 10-year bonds. That then not only forced the price to go down as it would, more sellers and buyers, but then you have this levered player. And I know your folks in crypto know about, the preferreds, the perpetuals, and the leverage.
They love leverage,
there.
unfortunately.
Yeah, they do. So the same thing in treasuries. So that snowballed.
Yeah.
And the more important part wasn't just a levered player unwinding, it was the potential outright long only person who said, no mas.
Yeah.
I don't like your plan. I'm voting no. And maybe I'm going to go into German bonds or just go into some short-term cash instrument. That was bad. And then to your audience, the number one metric that I think is a report card for Bessent isn't the VIX. And Bessent has never mentioned this index because he doesn't want people looking at it, I believe. And I like Scott Bessent. I think admirable what he's trying to do.
Yep.
But his real report card is something called the MOVE index. MOVE index. Yep. And it's a reflection of treasury volatility, specifically the futures, the options on the listed futures. And when things get a little hairy and squirrely, people will buy options because they want to protect and hedge. That index has not really come down since the 2023 bank failures and the rate hikes. And I think it's it reflects the fact that the market is uncomfortable with this much debt at these rates. So the MOVE index is now at a level called 130, or not called, at 132, closed last night. At 160, I believe if you look at periods of time, intervention happens. That is a VIX of 60 equivalent. So the MOVE index, and the reason why it's relevant, folks, is because treasuries aren't supposed to be volatile. It's the store of value. When we broke the peg to gold, the government said, forget gold. Here, this is our store of value now. Yummy, yummy. Hold our treasuries. This is the way that we're now going to convey value to you. Well, we kind of broke the bargain a bit again by issuing so many and not allowing ourselves to go into recession and let the market take care of recycling value. We stopped that and we issued debt. So the game, I don't know where it ends, but I really was, and I'm not just, personally, you can get really dark and unhappy about looking at this dynamic of debt. I had a different reaction when I learned about Bitcoin in 2000, late 20, early 21. I said, wait a minute, this can be the next layer that we step on. While the other one, as the government's doing, sort of deflates its value away. So there's actually the story has a happy ending. It doesn't have to be a Weimar at all. And I think certain people like Bessent, who owns Bitcoin? Dalio, who owns a little bit of Bitcoin. He's more of a gold guy. And who's the Southerner who called the 87 crash? Tudor Jones. Tudor Jones, Paul Tudor Jones understands it.
He was relatively early for a TradFi big trader. I mean, I think everyone should study. There's actually some really good documentaries, old school documentaries on YouTube that you can easily find. Paul Tudor Jones, relative early 2000, like during COVID, he started openly talking about Bitcoin on TV.
And I think Dalio has the best thematic approach to regimes in his, market cycles, 4 to 6 years short cycles, 80 years long cycles, which Bitcoiners would call the fourth turning. And the like. And yes, I don't know when it happens. Parker Lewis would say, he quotes the Faulkner book, I think, right? Faulkner. Gradually, then suddenly. And that's how macro works. It's like it just nibbles, 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 and then it blows. So that's why the move index, not the VIX, because the move index can't blow. If it blows, there's only one option. There's only one immediate option. You allow the failure, means that no buyers come in, you let it fall, and bonds go to zero. It can't happen. That's why, and I'm not getting promotion for this. That's why I have this book here, Lepard's The Big Print. It might be the most timely book written. Others have written great books.
We'll link it. We'll link it in the description.
It's a readable book. And then the other guy, Luke Roman, has done a wonderful job explaining the more detailed hurdles to a successful campaign for Bessent. But to your crowd, I think just looking at the practicalities of $125,000 of credit card debt, and you're only making 100K, and the teaser rate just blew away. That's kind of where we are.
When you say intervention, how would that look like, and what's your view on? It's always tough to forecast these things because everything is so volatile, especially lately. But what would be a reasonable timeline that you would expect?
I think we're at a level now where it could happen at an auction. If we, I haven't looked at the auctions too closely, but the 10-year on Wednesday. So the government has to fund every week. They fund T-bills. It's anywhere from like 10 to 50 billion. And old ones mature, and we assume there's a new buyer. Think of like refinancing your house. It's just we assume there's a new buyer, and there are. And the dollar isn't going away because we can't settle things. There's not another currency big enough to handle trade. So it's just so an intervention happens when an auction goes poorly and people go on strike and say, I'm not going to finance or I'll finance your 10-year 10 basis points higher, which would be a absolute disaster. 3 basis point tail, they call it, would be bad. So that would be one indication of a requirement maybe that would cause a similar thing to what you mentioned about that move from 435 to 459 that we had last week. That caused the tariffs. So that was an intervention. They had to quickly roll back tariffs and the timing. That was the market. An auction would cause a similar one. And then I'm trying to think of other. So it would just be any kind of what other move in the, I'm trying to think. Oh, well, look at history. The run on the banks. It really is mob mentality. It's just when, supposedly that was the venture capital folks who said, take your money out, secure it out of, was it Signature? I think the
banks
Signature was the California-based sort of venture capital bank.
It was SVB. SVB was one of them that blew up.
So that was the one that had people had large deposits in excess of 250. So what did they Fed? So a change in policy. 250 is not enough. We'll backstop everything. So again, back to the government saying, I got this. Kind of like Kevin Bacon in Animal House. Stay calm, all is well, and it gets trampled. The government doesn't want to get trampled, so they keep getting a bigger and bigger club and a bigger backstop. So the next one I think that would happen, which would indicate weakness and a losing the narrative of handling this in the marketplace by saying we're going to push rates lower. We have a deficit that's in control, so we should be charged less, like a FICO score. Charge us less money because we have a deficit in control. If Bessent does that, good for him. Rates should go lower. If he doesn't do that, that'll show up in this action. The Fed will say, we are allowing banks to buy treasuries with no money down. So they just created a 12 region banking system, the 12 regional banks and their member banks, to hold treasuries at zero. So you get 4% for free.
Yeah.
And how much can you get? A lot, because it's not included in your leverage ratio. So that would be, it's called the SLR, supplementary leverage ratio. They withdrew it during COVID. So that would be one measure that would indicate weakness, and Bitcoin would, and probably crypto generally would increase.
Yep.
And the reason why your crypto audience should be interested in all this is because a principle that I, especially since 08, have taken on as a first principle of looking at markets is that we are one water table. The U.S. needs to keep the boat floating globally because they can't afford waves, because we are inextricably linked to everything now. They own our debt. Look at tariffs. The game has gone abroad. Protectionism doesn't exist. We are interconnected. So, look at the crypto market. When did it do well? When we were flooding the market with money. And it was YOLO.
One of the questions that people have a lot is, waiting for QE, of course, because that's, everyone knows what happens to crypto specifically, when there's more liquidity and less fear. What's your view on interest rates and QE timing wise, and just like in general?
Michael Howell does a very good job. He's probably the preeminent guy out there. He's on Substack. You can take a wink. He gives you a wink at his Substack for free on global liquidity. We are one water table. So if, in early 24, everyone's like, if we're in quantitative easing, why is the market catching a bid? It's because China was easing. China's property values are going lower. Their residential property values. If you want, I can share a slide with you to post. So it's not just what the Fed is doing. China is a $17.5 trillion economy, the second largest country, not the second largest currency. The EU would be the second largest. So not only if the Fed has been tightening still, and they have through quantitative tightening, they're selling, the Fed is selling treasuries back to banks and taking cash out, reducing their balance sheet. But at the same time, over the past 6 months, the Treasury has been allowing their Treasury General Account, TGA. So everyone should sort of look at the St. Louis Fed site, which is a wonderful site with great pictures and easy access to data. They've been draining that down from 900 billion down to, like, I don't know if it's 250 or 300 now. So that's liquidity. So that's a checking account that's being drawn down. They're not issuing debt and saving it. They're allowing it to be spent. So that offsets what the Fed is doing. So it's a more complex, quantitative tightening and easing is more complex than just looking at the Fed's balance sheet. It's multiple government agencies, and it's now multiple countries, because everyone's in the same boat now. Europe has no growth, and they have rising interest rates. That's one thing we did, Matthias, besides exporting, entertainment and technology, we're now exporting inflation.
I mean, some of the countries in Europe, this, but maybe the audience doesn't, have seen more inflation than in the US, with much less growth potential too.
That's the Gordian knot that can really strangle countries into taking not exorbitant, but unusual actions, extraordinary actions in order to address. It's a point of, are you willing to take the near-term pain? Look what Ireland, Greece, and Portugal were forced to do, in the early aughts, not early aughts, in 2010 to 15. Austerity, and they're doing okay. They have other issues, but they went through it. The larger funding countries, Germany, France, US, China can't. They're holding the bag. They have no one to support them.
I think that's the main problem that makes Bitcoin, I don't like saying inevitable, but inevitable, is that the problem is not going away. And so, it's, what do you do? The US can't afford to, they literally cannot afford uh, to not take measures.
No. So to your audience, so you have a, model, people have different models.
Yep.
Like if you want to look at an equity, give me 3 numbers and I'll tell you where the equity price is. Tell me the dividend, tell me the annual earnings, and tell me the PE multiple, and
Yep.
I'll nail the price to the penny. Same thing in credit. You can price it with probability of default, where the risk-free rate is, and the recovery rate. There's just formulas.
Yep.
So for debt loads, there are only 3 ways to handle debt. You grow your way out of it. Again, think of you as a $125,000 credit card and $100,000. Are you going to grow your way out of that? No. You grow your way out, not going to happen. You default, which means you just say, I'm out, go through the bankruptcy court. The founding fathers gave it to us. It'll be a long game, but I'll get through it. Or you inflate your way out. And this is a weird concept, Matthias. And what does it mean to inflate your way out? Well, that's kind of what we do when I buy a house. Let me just take this analogy. Give me 30 seconds. Hopefully I can land this.
Yep.
If you buy a house, say you buy for $500,000 and you have $400,000 of debt, mortgage on it. Over time, you're like, my house price has gone up and your debt hasn't. It's fixed. Yep. Why has your house price gone up? Because you made improvements to it? No, because inflation is a function of growing money supply. But forget it, inflation. So your house price goes up and your debt stays the same. You're, quote, making money when you sell it, and you've made that. Good for you. The government wants to do the same thing. We have $34.5 trillion in debt. That's fixed. That principle's fixed. I want my GDP to go up. So what do? Have prices go up. Nominal GDP goes higher. It pays off fixed debt faster. We have to have inflation to pay off our debt. That's what's going to happen. So if you're in crypto, what does pretty well in inflation? Finite assets, desirable finite assets. So that's the end. That's why we think that's the end game, is to inflate our way out of it.
So this talks about the Fed, of course, interest rates. It's all over Twitter. It's all over the news too. What's your forecast or your view? What do they do with rates? When do they, reduce? What's your view?
Let's look at what they did in September. In September, they lowered by not 25, but 50. I guess they had a growth scare. I didn't think, and the market obviously didn't think, that it was a reasonable response. So the part that the Fed controls is overnight to, say, 2 years. That's what they control. Lower it. They can do open market operation. They don't control the 10-year. And the 10-year said, what'd you just do? You lowered rates. They're like, there's inflation out there, pal. And the 10-year went up by 100 basis points. Through the year. So James Carville, who's a famous political pundit from the 90s, and he's still on there. They call him the Raging Cajun. He's a big personality in the U.S. He famously said in the 90s, after the Mexican Brady bond crisis, he said, when I was younger, I used to think I want to come back as an astronaut or a baseball player that could hit 400. He said, but now, after seeing this, I want to come back as a bond market, because no one messes with the bond market. The bond vigilante. So the bond market said, the reason the bond market's important and growing up in credit is because you're only going to make 4 or 5%. You buy a bond at par, you get a 5% coupon, but you can lose everything. And the government and someone can erode away your value by having inflation, meaning like, oh, good, 5%, but prices went up.
Yeah.
So that money you're going to get in the future that's fixed isn't going to buy as much purchasing power.
Yeah.
So bond market is hyper vigilant because they have a constrained cash flow.
Yeah.
It's better information than equities, which can grow. You know, prices go up, they charge more.
Sure. Yep.
So that's why the bond market is the thing to watch. The MOVE index is a metric, not the VIX. And that's Bessent's report card. And
Yep.
right now he's getting a C-.
But he's also stuck, right?
It's not his fault. I agree.
Yeah.
Matthias, again, I respect his
No. I
acumen.
mean, I'm this is incredible. I'm seeing comments in some of the groups here. They're loving this because it's very intense. But this is what I promised with CoinRock. I say, you know, I want to bring people who know and can talk about this for hours. So
But bring
no,
it
of
down to a
course.
level that everyone can understand. Because
Yeah.
I didn't understand this stuff 10 years ago.
Yeah.
I mean, not till 08 when I was at this fund where this really smart macro trader said, when there's a crisis, there
Yeah.
are never enough dollars. I'm like, what does that mean? I mean, I was in the industry at that point, like 15, 18 years.
Yeah.
I'm like, well, what does that mean? He's like, everyone runs for dollars.
Yeah. So Bessent being stuck, what is his move? What are his moves? What can he do and what can't he do?
And so this is a part where I don't know fully, and I'll only explain it. I'll share with you where I think he's going.
Sure.
Our GDP has 4 components. Consumption, what you and I buy, spend.
Yep.
And that's 70%. It's the biggest number of any developed country. We consume a lot, more than we produce. The other one is government spending. It's about 15, 18%. And the other 15 to 18% is, or 18% is corporate investment.
Yep.
Then there's this little nub that everyone up until recently overlooked called net exports and imports. And it was always plus minus, or always minus in the US really for the last 30 years.
Yep.
2, 3%. Like, who cares? Throw it away. Let's look at what's the government doing, what are companies doing, what's the consumer doing.
Yep.
But the net number, that 3% number, which is $1 trillion of the $28 trillion in GDP, just $1 trillion. Why are we focusing on it? Because it's made up of 2 much bigger numbers. That 1 trillion or 14%, that 3% net is made up of 14% imports and 11% exports.
Yep.
So that's 25% gross value that nets to 3. That's what Trump and his administration are going after. They're trying to change the cost structure or benefit. And I don't know how it's going to come out. Do they accept a lower interest rate? Like, I don't know the game, but that's the game. It's not 3%, folks. It's a much bigger attack vector. It's 25%, 11% of exports that we push out, and 14% of imports we bring in. So it shouldn't be discounted. That's the game. And I think it's to change potentially the behavior or the trade dynamics. And I don't know enough. Again, I don't know, but that I do know is that I think there's more to it than just the net number and just the tariffs collected.
It's quite a big lever then, despite the rhetoric and what the press covers, because they love to talk about Trump style. But if you actually look at the numbers, it actually is a powerful lever if they can get to the number they want to.
It is a powerful lever. I think it's to achieve something else, because in my limited understanding of tariffs or history is, it's not a tax on another country. Like he talks about the External Revenue Service.
Yeah.
I don't know where that revenue would come from, because on the tariff, the U.S. company pays it and either eats it or passes it. It's a
Yep.
domestic tax, flat out. Anything else is incorrect. It's a domestic
Trump is
tax.
great at framing things. He's one of the, to talk about this too. He's one of the
he's
best speakers, presenters, salesmen in history.
He is a
Amazing.
yes, he's a mercantilist and then one of the best salesmen. Yeah. So that's why the tariffs alone won't get us there. And you know, we joke about this movie called Ferris Bueller's Day Off, 1986, where they have that scene with the the history professor. I mean, brilliant.
Yeah.
So Smoot-Hawley didn't turn out well, and Trump's tariffs roiled markets in 2018. Yeah. 2 down, 9-10% months in the second half of 2018. Yeah. That ended up, I think leading to a constraint. JP Morgan, like the Fed eventually reversed course. Yeah. So we've seen analogs on this, but just to give perspective, Trump's tariffs in 2018 were 20% or less than what he's proposing now. It's a fraction. Yeah. So the market, it's one reason why, Matthias, I don't think we have a lot of time, because even though 10% is the number we're putting on non-Chinese companies, Chinese imports are obviously greater than any other country. Yeah. I believe that's the case. And therefore, we're going to be experiencing that quickly, so I don't think we can absorb, companies can absorb, or the consumer can absorb an extended tariff regime. Yeah. Growth will fall much faster than any benefit from tax cuts or lower regulation. That's a gap. Yeah. The government's going to eventually realize those pro-business, lower taxes, less regulation over time. Yeah. But we get hit right in the teeth with that tariff up front. So that's why the MOVE index, I'm watching it. That will express the pressure in our funding markets. And remember, the government is, it needs to fund itself. And here's another question for your folks to look at. Imagine you have a friend who's living pretty well, and they have a nice house and everything, and they have a good job. Like they're making, say they're making $500,000 a year, living in a nice house, and yet they still have to borrow $3,000 a month. Yeah. Hold on. They're making $500,000 a year. They're living okay, and they still need to borrow money. Yeah. That's been the U.S. for the past X amount of years. 4% unemployment looks pretty good. 2.5% growth, check the box. Yeah. Why are we at one of the highest deficits, almost like a kind of a wartime level deficit? Yeah. Bessent's job is not easy. It's not over. Yeah. And it's one reason I love the unencumbered asset that is Bitcoin. Yeah.
What do you think Bitcoin does in the next 6 to 24 months? Short term, it's always very difficult, right? But I'm curious to hear your perspective, short, mid, long term.
So just prices. In December of 23, I put out a price target of 250 to 450 for the end of this year.
Okay.
And so, and I put out 110,000 for end of 24. I was wrong by a couple dollars. Yeah. Went to 109 and change. Yeah. But I've overestimated the value a bit because I had a higher mid case in 2024 based on happenings. So there are a lot of dynamics. I still am constructive. I think the 250 is very possible for Bitcoin this year. And the reason is because the problems persist and the institutional money that's slowly becoming acclimated. And there's still tremendous resistance, folks. I mean, I live in an area that grew up in finance, the tri-state area. Everyone looks at me like I'm a moron or just have 3 heads, or they just pat me and say, oh yeah, that's Marc and Bitcoin. So there's the average or large proportion of traditional finance is not there, but there are beachheads, BlackRock being a huge one.
Yeah. Yeah.
that are adding to it. And I think look at what's happening here. I'm looking at my screen. Month to date, Treasuries are down.
Yep.
Broad bond indices are down. High yields down. Equities are down. The dollar's down. Oil's down.
Yep.
Bitcoin's up 3.2%. Gold's up 3.19.
Yep. Yep.
I'm reading a Barron's article from 2 days ago, and they say, look at Bitcoin. It's doing exactly what NASDAQ's doing again. They're just ignoring the facts. And,
Yep.
and I'm trying to come at this methodically. I don't mention price a lot. I just talk about the fact that it's a decentralized technology network, and every business that's surviving is a network based on the internet.
Yep.
Gold is not. Our banking system is not. Effectively, it's creaking and broken, and requires leverage to survive. Bitcoin doesn't. So
Yep.
I am getting louder though, Matthias, I'm looking at the screen, about the price action, because it was not expected by me to happen this early. But we can point to, especially when there's not a liquidity pump.
Yep.
So instead of price, what would I look at? I really want to see other corporations other than Michael Saylor buying. I mean, I know Dylan LeClaire's been out there. Dylan LeClaire is someone to follow. I think he's 26 years old.
Yep.
He knows finance, banking, and Bitcoin as good as anybody that I know in the world.
Yep.
I don't know how he learned it so quickly. He is authentic. I really like his approach. He's always discovering. He's not shilling. And, he joined Metaplanet, and that guy is a former Goldman, what do you want to call it? Salesman or executive. And he understands markets and understood that his old business was a buggy whip business, slow.
Yep.
And he's like, wait a minute. I know what I can do. I can introduce this exponential grower and cover it with this legacy wrapper, and people will like it. Yep. They won't know what it is, except they know, like an ETF, they know the wrapper, so they'll accept it now in a form of a capital market wrapped equity security. It's just brilliant. So more companies with a FASB rule coming, adding a treasury, huge sign, huge signal.
Yep. Yep.
I hope the U.S. government does not buy as many. I'd rather be in sort of a corporate and individual hands, but I think there'll be sovereigns coming in.
I think a lot from the conversations we're having, I mean, the U.S. really has always been the dominant financial player of the world, right? So we just covered this before the show with the regulatory landscape. They're aiming to bring, we had an article about this, they're aiming to bring clarity by August this year. I have quite a few friends in the hedge fund space, mainly in London, and this is the first cycle that they're actually listening and more open-minded to crypto and Bitcoin. During COVID, the same conversation, we had these conversations about doing things together without getting too much detail, but it would always end up being something along the lines of, we're interested, but there's no way we can put our name attached to it. So it would be through an intermediary, which is very different. The conversations we're having today, from whether it's with regulators, everyone is waiting for the U.S. to publish its framework. And I think with that will come a lot of, finally, that institutional interest of, at least they'll know, are we in or are we out? But right now we're still waiting a few more months.
I think that's one of the biggest takeaways of this whole discussion is the practicalities of adoption and the roads to it that you just mentioned. From the Genius Stablecoin Act that's being, it has bipartisan support. Banking system is looking for something, Citibank common stock trading about $63. is lower today than it was in 1993.
Yeah.
The banking system is a dead man walking in the U.S. JP Morgan, the best of the best, is basically an S&P proxy. It hasn't outperformed it, and everything else is a laggard. So the banking system is looking for new technology, new games. They just they probably want to control it.
Yeah.
And the stablecoin they can, Bitcoin they can't, but stablecoins allow obviously more rails for fiat to enter.
Yeah.
So I agree with you. I think Paul Atkins has over $6 million in investments in, I think, Anchorage and other funds. Scott Bessent owns Bitcoin.
Yep.
You know, Trump's family's like, see ya, pops. Enjoy the politics. We're going to go build out the digital side.
Yeah.
So more clarity from the SEC is a 180, and that's not stopping. So I agree with you that probably people are waiting until they get the clarity.
Yeah.
And then price won't wait. Price will price it in quick. Price won't wait for the banks to have a final product. It'll be priced in very quickly.
Well, you can even see very conservative banks. You know, we had the co-founder of Tether last week on the show, and I was saying that, so I have Web2 businesses too, so e-commerce, information products too, so outside of crypto. And we've had, since COVID, several of our completely unrelated crypto businesses being shut down or threatened to be shut down by banks who do not, by big banks, by the way, who do not understand, or who just took a very anti-crypto stance. And that's changing. You see a lot more, even older banks being more open to not buying Bitcoin, but offering it as a service. Because of course, it's a market now for them too. And I'm very curious to see what happens once we have that framework in August, September. Price action, of course, but also who comes in, because everyone, you know, it is a race, as you know, and I think the audience doesn't really understand what might happen once there is clarity, given the size of these players coming into the space.
Just look at what Sand Hill Road did for California with, you know, Silicon Valley. That was nothing, and it dominates finance, which was our biggest export. So I agree with you. And on a constructive note, and I like the legislative arm of the government more from a clarity standpoint and certainty. So like the ruling in August of 23 by Judge Rao against grayscale was, to me, the landmark decision that unlocked everything. They, you know, they almost dared Gensler to deny it when they said arbitrary and capricious, I think 11 times. So I love reading it, being a former distressed analyst as well. You can really, that's a gateway for a foundation for any company. Once they get a proper legislative footing, then the market will follow. When judicial, not judicial. The legislative side, I'm not a pro in. It's more varying. It is more constructive what's going on. If we get legislation, which we need, it would be huge. And the Genius Act has said stable coins need to be on a public blockchain. None of this private. That is one of the least heralded statements, I think, out of the Genius Act. Is very constructive for the beleaguered Ethereum, who's just, you know, dying under its own weight right now.
Yes, we cover it a lot. I'm bullish ETH, but it's been such a depressing ride over the last 2 years.
And you know, folks like Justin Sun of Tron. I mean, I can't imagine. You know, to have U.S. stablecoins riding on his rails. I mean, so I think there's still some legislation of clarity. The Circle IPO will be big. And if anyone wants to know about Bitcoin, the asset, and say the asset versus the industry, over the past 3.5 years, or let's go from the Coinbase IPO. Coinbase has not recovered, I don't believe, above its IPO price.
I think it went up 400-ish.
It went up for a cup of tea. I did a normalized version, so I forget the dollar price. but I believe it's below its IPO price.
Yeah.
And it had like when it IPO'd in April of 21, I think that's the right date. It announced like 1.2 billion in quarterly revenue. That's about its quarterly revenue now.
430, as high as 4. So it opened at 381 up to 430.
And what's its price now?
Probably in the 200s.
Something like,
Probably a bit lower. Let's have a look.
So the point is, we have had, think of the progress we've made in the industry since April of 21. That was even before the Chinese ban. We went through
175
China
now. Yeah, it's a third.
What is it?
174 today.
Wow.
Yeah.
So what I guess the point is, the industry is still on its heels. Like, it hasn't even begun to get the breath, to get the infusion of future value that we've had from Judge Rao's decision, from BlackRock coming in, from the Potential Genius Act. The industry is still woefully undercapitalized, and the promise is much greater than the prices. So for what you're saying, what we're saying is, will legacy banks be able to do it on their own? I don't think so. They either have to buy it, they're not going to be able to build it quickly, so they have to ingest certain companies like Anchorage Digital or others. Coinbase, I do not think wants to be bought after going through all this. I can't imagine he wants to be Jamie Dimon's, digital minion.
I mean, indirectly, they already are unofficially, right? They are a U.S. government entity in a way, and I think that's
they
actually
totally
necessary
are,
for the
but
stability of even of the industry.
They are, and they're going to have to operate under obviously SEC reporting entity for the last 4 years. They are going to be bound by capital requirements, leverage, all that. And they're building up to do that. They bought, or they're beating, I don't think they bought the Dubai-based derivatives firm, Durbit. Right? I think that's in talks, or is that even?
I mean, Kraken. We just covered this like before the show. Kraken's doing the same. It's the same move, right? They're all expanding in leverage because that's also where the money is.
That's where the money is. Absolutely. There's no spot trading is a loss leader. You need to be in derivatives. In finance. So going back to your point about what people should look at is, oh my goodness, traditional finance needs this because they're dying. Look at ETF prices. They're like basis points. In the old days, people would make 1 or 2% on mutual funds, 4 points on a front load. Now it's less than 4 basis points. So there's less revenue. They're looking for new business, and holy moly, this thing's been around for 15 years. It's been tried to be killed, and it's only grown, and the strength of its network is there. And every bit of FUD, I'm a former risk manager. I look around the corner and I try to look at where I'm gonna get hurt. And I have to cite when people say incorrect things. I still talk to my TradFi buddies, Matthias, and they say, well, what about criminals? I'm like, the percent and ratio, it's more in dollars still, folks. So you're wrong. Stop. And there are other reasons I won't get into now, but I will hang my hat on the fact that it's a fallacious argument. And then they go on to energy. Again, they don't understand how Bitcoin helps release trapped energy, how the technology makes it more efficient with each incremental, input of energy. Again, wrong. Quantum computers. Okay. So quantum computers that can own everything in the planet are going to come after Bitcoin first. No. And if they do it, there's no value to be gained because so from a game theory standpoint, on so many levels, that would be the last one. Not even to say, if it becomes a settlement layer, it'll attract the better developers. Who can evolve faster. And I've spent time on this. This is one thing for people who are on the fence. And I don't know, I think your show is probably the converted. Is that fair? That people are already
Yeah. I say good 90% converted, almost
all right?
almost converted. So I try to give them more of a TradFi experience too.
Yeah. So then I guess I'll say is the one water table
Yeah.
is if you track your bags and your how they've done over time, folks, you'll see that it follows global liquidity pretty well and the hype cycle. And that's why you should be watching the move index, because when that cracks and the government reacts, it'll be more powerful than any Trump truth posted, because it will lift the highest of beta assets.
Yeah. I think that's a great way of of ending the show here in the next few minutes. So one of the questions that everyone wants, is when price up, right? So you mentioned when it cracks. What's your view on time? Are we a month, 6 months, 5 years? What's your view on if it cracks? What is likely? What is the likelihood of the when?
If I'll go back to history, if we have a March 23, where I worked at Credit Suisse, where Credit Suisse said, the Qatari said, we're not going to fund you anymore.
Yeah.
Boom, you're dead. Go to UBS. I think that was March 14th or 15th.
That was a big impact.
Bitcoin,
I'm a Swiss citizen. It was the pride of Switzerland. It was, if you worked at Credit Suisse, the love-hate relationship with UBS, and so it was a big deal for the country. Beyond finance.
And I guarantee you, UBS did not want to take on the size of that. That's just sorting through that. It's kind of like what JP Morgan had to take on.
Yeah, it was a government
or
facilitated.
Bank of America, Merrill Lynch.
Yeah.
All that. So that morning, or that period, you look at Bitcoin went from 30,000 to 19. Like, risk off.
Yeah.
And then it shot up, or 25 to 19. It shot up through 30 because there was a backstop by the government. The U.S. government then infused $400 billion. And they said to the banks, whatever you have, we'll buy, because bonds. Remember Liz Truss was forced out of office in August of 22?
Yep.
Because she had a plan. She's like, we gotta do something.
Yeah.
And then she was forced out in 44 days. I think it was the shortest stint since
Prime
year
Minister.
1250.
Yeah.
The reason I mention that is because it was breaking things. It broke the UK. It broke US banks. So Bitcoin went up within days.
Yep.
Or hours. So if we have a print, go look at NASDAQ or versus Bitcoin and follow that price trajectory, and you're going to watch Bitcoin rocket like that. So a reaction that's going to require the Fed to be the firefighter, not the arsonist.
Yep.
You'll be moving, I think, the same day.
Yep. I know the audience loves this. So anything you'd like to discuss? Say, of course, we'll put all links to your Substack, to anything you're doing.
The Substack is really put a lot of much more time than I get sort of utility out of, but the longer term and playing the long game, it does help my process. So it has utility.
Yep.
Just sort through different Substacks. Some are more thematic, like Can't You See, August Dies She Must. The one from July about Treasuries become a liability, not an asset.
Yeah.
All the stuff, or the one about the center cannot hold. I mean, these are thematics that you're watching play out. That was written in July about France, and it's based on a poem from 1919.
Yeah.
And we've seen these cycles.
Yeah.
Then I try to do some market stuff, because you got to eat each day sometimes. You got to know what's going on.
Yep.
Yeah. So take a look at that. Hit me up if you have questions. There's a lot of smart people out there, but having your own system, take it in and build your own spreadsheet so you can have the data and not
Yeah.
just these narratives. That's what's helped me in my career, is rebuilding and seeing the world through data and seeing if
Yeah.
my thesis is being validated.
You know what's interesting is, talked about this last week too with William. So the Tether co-founder, who's also from not the crypto generation. He was very early in crypto, but you know he's older than me, and definitely older than many of the viewers here. And I do think so. I just turned 39. I was young enough to get on the internet very early, but also knew a world before the internet when there was, you know, in the mid 90s. I mean, there was no commercially, I mean, yes, commercially available internet, but nothing comparable to today, no social media. I do think that, and you being, of course, from a previous generation even, there's such a strong, I think it's such an underrated skill to be able to um, do work without being disturbed and connected, and doing deep work. And one of the things you just mentioned about creating your system, having your spreadsheets, is unfortunately something that Gen Z today struggles with, because they can't disconnect. It's just so difficult for them. Whereas for you, and thankfully for me, I'm like the last generation before you know, the online all the time generation. It's much easier for us to log off and disconnect and actually do deep work. So you were able to, you have that skill set of being able to do work, read, and come up with your systems and models.
Yeah, thanks for ending on that, because that is something that has helped me.
Yeah.
And I didn't realize it led me to what I'm doing today. And it was
Yeah.
slowly, I felt like, each one of us, we got to remember Superman had a day job,
Yeah.
and then the compounding that you can do on your own is going to lead, listening to this has been really helpful for me. So thanks. And
I
if it's
appreciate it. Thank
okay,
you. Yeah, yeah, yeah.
I want to talk about one more.
Of
It's so
course.
new that I forget about it. I'm doing a podcast with a former client that I've known for 10 years named Bill Mann. He was at a hedge fund called AQR. He was at a hedge fund called Two Sigma, and he was a deep researcher. And he's more an AI guy, but he's
Yep.
now realizing what's going on in digital assets. So we're bringing both on our podcast called The New Barbarians.
Yep.
And
Nice.
yeah, and we'll obviously highlight this reel in our next episode. And we talk about a lot of topics, both, and they're related. AI and digital.
Yep.
Oh my goodness, it's pretty cool to watch. Like, it's like, how is
Yep.
this happening? And then you're like, of course it's happening. It
Yep.
always finds the most value.
I think we value it more. We, as in our generation and your generation, even more. We value it more because we've seen the rise of these things, and we've seen the before. No cell phones, and now we see AI and ChatGPT, which is, you know, the 15-year-olds today grew up in this, so it's less impressive for them. But for us to be able to come up with, I'll give you an example, right? So before every show, the way we prep for these shows is we'll basically find the bio, or in this case, your Substack. We literally copy pasted your Substack into ChatGPT and said, "Hey, I have a show with with Marc, and I'd like you to come up with 15 to 20 interesting questions." And it's funny, I use one, and then the conversation flows like this because I don't have time to look at my screen even.
No, really?
But that's ChatGPT, unbelievable. Which before you could not use it,
And I think that one of the biggest things about AI that's been doing is that people realize it's not like a authenticity stealer. You still need to provide the value.
Yeah.
And all it does is like I joke that, and on the bond floor, we used to have these huge calculators called a lane calculator. And the lane would, you'd have to type in blah, 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 blah.
Yeah.
And then we got the HP12C, which is in your hand. Awesome.
Yeah.
And then Bloomberg came along, and it had every single bond term in there.
Yeah.
You would hit up the ticker. And so we've always had tools that made things faster, more efficient. And AI is just doing that.
Yeah. Yeah. It's been a great conversation. We'd love to have you back when we see the next move from either the Fed or the U.S. government. I think that this is something that a lot of people, again, not just in our audience, but just crypto as a whole, don't spend enough time looking outside of this small bubble that is crypto.
Yep.
And I think they would do much better being interested in the macro and in everything we talked about, because it changes every day. We could have this podcast tomorrow, and Trump could tweet out something 10 minutes before the podcast, and the conversation changes completely, right? So it's so fluid.
Yeah, I think the interconnectedness of markets is one thing that I'll leave your investors with, your audience. We are one water table.
Yeah.
And Bitcoin is just like going from low concentration into a high concentration void.
Yeah.
And that's what the price is filling. And that's inexorable and unstoppable.
Yeah. I think that's a great way to end it. Thank you for coming on. We'll definitely have you back. Please, everyone here watching, go and follow Marc. We will have the recording up. We'll have segments, clips, and everything. So you'll be able to find and follow Marc. Thank you for being on the show, Marc. And I'd love to have you back on the show in a few months to debrief and to talk more about everything, and hopefully in a better and a more bullish setting for Bitcoin and crypto in general.
Agreed. Pleasure. And it was great working with your team. This was seamless for me. So thank you.
Thank you. Appreciate it. They'll love that comment, and I know they're watching. So thank you.
Take care.
All right, guys. Bye. Hey, thanks for watching. If you got value from this episode, you're going to love what's coming next. So subscribe now. We drop new episodes and videos several times a week, featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description, and we'll see you on the next show.